Hey everyone, today we're tackling a topic that affects so many buyers in 2025. High interest rates. With mortgage rates right around 7%, you might feel like home ownership is out of reach, but let me tell you, it's not. There's smart strategies to help you navigate this market, save money, and still make the dream of owning your home a reality. So if you've been thinking about buying, but feel a bit overwhelmed by the current rates, this video is for you. Before we dive in, I have a quick favor to ask. If you find any value in my videos, smash that like button and subscribe to my channel. Your support helps me to bring you the latest insights and South Florida market updates. Real quick, my name is Rolly and I've been a South Florida real estate broker for over 10 years. If you or anyone you know is thinking about buying or selling, or maybe just has a market related question, give me a call anytime at 786-306-9335. I'd be honored to help. Now, let's jump in. First, let's talk about why interest rates matter so much. Think of your mortgage as a combination of three things: the home price, the interest rate, and your down payment. Even if home prices stay the same, a higher interest rate means you're gonna pay more each month, and that adds up over time, quicker than you think. For example, on a home that's about $400,000 with a 20% down payment, your monthly payment at a 6% interest rate is right around $1,900. But at 7%, that same payment jumps to $2,100. That's an extra $200 a month or $2,400 a year. This is why buyers are hesitant right now, but don't let that stop you. There's ways to work around it, and I'm here to share them with you. The first step in any home buying journey is to get pre-approved for a mortgage. This does two things. It tells you exactly how much you can afford, and it shows sellers you're serious about buying. When you're pre-approved, you can avoid falling in love with a home that's outside of your budget and focus on properties you know you can afford. When shopping for loans, you don't just want to go to one lender. You want to do some comparisons. Compare rates from at least 2 to 3 different sources: banks, credit unions, and mortgage brokers. Although mortgage brokers tend to be a bit better, each of them offers slightly different terms, and those differences can save you thousands over the life of your loan. Also ask about lender-specific programs. Some lenders offer first-time buyer incentives, rate buy-downs, or grants that can help offset the cost of high rates. If you plan to stay in a home for less than 10 years, an adjustable rate mortgage, or ARM, might be a great fit. ARMs start with lower interest rates for a fixed period, like 5 to 7, maybe even 10 years, before adjusting annually. For example, a 5/1 ARM might have an initial interest rate of 5.5%, significantly lower than the average fixed rate of 7%. And after 5 years, it adjusts based on the market conditions. But if you plan to refinance or move before then, you can lock in the savings without worrying about the adjustment. This is a great way to save money up front, but make sure you understand the risk before committing to an ARM. Next, let's talk about negotiating seller concessions. In today's market, many sellers are more flexible because they know buyers are feeling the pressure of those higher interest rates. Sellers can help by covering part of your closing cost or even paying a temporary rate buy down. A rate buy down reduces your interest rate for a few years of your loan, giving you some breathing room as you make that adjustment to home ownership. It's a win-win. The sellers get their home sold and buyers save some money up front, which we all know is very much needed at times. Did you know that there's programs designed to help buyers with their down payment? These can make a huge difference, especially in high-cost markets like the one I'm in South Florida. Programs like the Florida Hometown Heroes or local grants in Miami-Dade and Broward counties offer financial assistance to qualified buyers. These can cover a portion of your down payment or closing cost, making home ownership much more accessible. If you think you might qualify, reach out to a local lender or housing counselor to learn a bit more about these programs and find out which one is the perfect fit for you. Finally, let's take a step back and look at the big picture. Yes, interest rates are high right now, but that's not permanent. Rates have historically gone up and down, and you'll likely have the opportunity to refinance in the future. The real question here is, do you see yourself living in this home for the long term? If the answer is yes, then the current rate becomes less important compared to the value of building equity and having your own place to call home. So, what do you think? Are you ready to tackle the 2025 market and make your home ownership dreams a reality? Let me know in the comment section below. I'd love to hear your thoughts. And as always, if you're thinking about buying or selling here in South Florida or have a real estate related question, feel free to give me a call anytime at 786-306-9335. I'm Rolly, your realtor for life, and I'm here to help you every step of the way. Before you go, don't forget to like this video, subscribe to my channel, and hit that notification bell so you never miss an update on all things South Florida real estate. Thanks for watching, and I'll see you on the next video. And hey, real quick before you go, take a look at these two and let me know what you think. Catch you later.